Hello and welcome. We are going to talk about how to get to owning real estate with little to no money down. Stay tuned. We're getting ready to get into it. Okay. How are you going to purchase real estate with no money? Is it possible? Are people saying this just to draw you in? No, I'm not here to sell you anything unless it's a piece of real estate in California. Okay. I'm here to give you the good and honest truth about um, how you can get a property, okay, and get it for little to no money down. You might say, that sounds ridiculous. Well, it's very real and it happens a lot more than you think, you guys, okay? All right, so let's get into it. Who am I? Okay, this is Carla. This is my new YouTube channel, Carla the Closer. I am a mortgage and a real estate broker. And I help people find and finance real estate. 20 plus years in financing. I own a small real estate company and a small mortgage company that I am very proud about, and that God has blessed me with. And I have the opportunity and the amazing privilege to serve people like you. People who are looking to impact the lives of their family and generations and enrich themselves so that they can help their community, and all while accessing and getting access to ownership through land and structures and doors and acquiring real estate in the beautiful state of California. There you go. And so, the purpose of this video today is to give you kind of an overview on how, when I say people are buying house to zero to no money down, what that looks like, and what are some of the options that could potentially help you. And I just want to make sure that you guys can hear me correctly, because if you can believe um, that I just did this video and the sound was off, and I gave you guys all kind of good information that I'm going to give you again. Okay, let's go. All right, so what does it take for you to buy a house not having no money? Okay, it's possible. Now, when I say not having any money down, what I'm really referring to is the two forms of down payment that you need, or the monies that you need to in order to acquire real estate, generally speaking. There are more ways outside this box to acquire real estate, like if you inherit real estate or you do a seller carryback. There's other ways to acquire real estate that don't require any traditional money down, but I am speaking of a traditional way that most people purchase a home, either through an FHA or a VA or a conventional type of financing, okay? And those loans require, if you're a first-time home buyer, which, what is the definition of a first-time home buyer? It's just somebody who hasn't owned their primary residence within the last 3 years. So the minimum requirement to put down on a property on those general loans are 0% to 3% to 3.5%. Okay. I think we all know what the 0% is. That's if you're a veteran and you're eligible for VA benefits. Okay. Generally speaking, 0%. Then we have conventional with first time home buyer benefit, it's 3%. And then FHA, of course, requires 3.5%. There are some differences. There are reasons why we would use one over the other. But for the sake of figuring out how you're going to get a house with no cash, we're going to kind of use these as a standard example. Okay. All right. Now, I'm a California broker, so we're going to base this on a real life example of property here in we're going to use Solano County. We're not going to select an exact property, but we're going to use an estimated sales price of someone looking to buy in the Bay Area, okay, in a moderate income. All right, so at 600,000, we're going to use a purchase price of 600,000. So you could write $600,000 on your paper. Now, remember we talked about there being two things that need to be paid for in order to purchase a property, which is your down payment, and what's the other one? What's the other one? Now, one thing that I appreciate is that social media and the web and technology has made us have access to a lot of information. So I know that there are people who say that there's a lot of people who don't know the what it takes to buy a home, but I feel like most people do know, right? So it's closing costs, right? Down payment plus closing costs. Your down payment at 3% of 600,000 is how much? It's $18,000. Yay, it's 18,000. Okay. Now, your Closing costs, we're going to estimate. Now, closing costs, now remember, this is for entertainment purposes. This is illustration. I am by no means quoting you a payment or telling you what your interest rate could be. We're just kind of dialing in the possibilities and giving you good examples, real life examples. I'm basing things on today's market, which is May 20th, 2026. So if you're watching this video, in 2029, just base it on the market you're in and in that moment. Okay. All right. Now, $600,000, right? That's our purchase price. Now, $600,000, we talk about how are we going to get the down payment paid for. What did we say the down payment was? It was either 18,000 or 21,000. If you're doing an FHA loan, that's 3.5%, and then 3% is 18,000, right? And then we have another 3% for the closing costs, which is another 18,000. So we're talking about how much do we need? We need 36 to potentially 39, $40,000 to buy this house. Now you might say, I got it. Okay, you got it. Good for you. Good. Let's do it, you guys. Let's do it. If you don't have it, or you might say, I don't have all of that, well, then what are you going to do? All right, so here's the solution. I'm going to go talk about the solution that most people want to hear, which is down payment assistance. There are, of course, other ways to get your down payment assistance paid for. Mom and dad, auntie and uncle, take money out your 401k. That's a very good way to get your down payment assistance, or rather, excuse me, not down payment assistance, but it's your assistance because it's your retirement. You borrow from yourself, you pay yourself back. Generally speaking, some and a majority of retirement programs allow employees to take out money to buy their first piece of real estate or a piece of real estate. You have to find out. And there's some that do not. But that's a way. But let's talk about down payment assistance. And for illustration purposes, I'm going to use the Cal FHA 3 or 3.5% loan program that they have. Now, I'm using this as an example, but just know this, depending on where you're at and what county, there are different programs in different counties within the state. So this is definitely not a video about all the down payment assistance programs that are available in California, because that video would just be too broad, right? So if you want to know specifically about your county, then reach out to me directly or a loan professional that specializes in down payment assistance in your county. All right, cool. So at 3.5%, and I'm using the reference for their small loan, not their equity share loan. That I'm not definitely talking about the equity share that gives you 20% and all that. I'm talking about the one for 3.5% that you have to pay back. It's a balloon payment within 30 years. They give you the loan for your down payment or your closing costs at 3 or 3.5%. You pay, I believe, simple interest. That is a deferred payment with the balloon payment after 30 years. So you refinance in 10 years, you can pay it off. You sell a home in 10 years, you pay it off. You refinance before 30 years, and then you pay that silent. There's no payment on it. This is a good option for someone who has income, but they don't have any money and they still want to purchase a home because they're paying a lot of money in rent. This is an option, right? So they give you the 3% or 3.5%. The caveat to this loan is that you have to take their first mortgage, okay? And their first mortgage today is pricing out with a payment of about between 4,400 on FHA, all the way up to 4,900 for a conventional loan. All right, because the rates are different. And if we're talking about 600,000 minus only 3% or 3.5%, depending on FHA or conventional, FHA in this instance is cheaper. But that's the reality of what you're going to pay. Now, that's just taking care of one part of the payment. Now you say, okay, Carla, they paid the 18,000, they paid the 21,000. Okay, I can make this payment for 4,000, but I can make it. What about the other 21,000 that I have to pay, or the other, 18,000 that I have to pay? Where's that going to come from? Because I don't have it. Okay. Well, here's a strategy. What I've been seeing and what I've been doing with my clients is negotiating for the seller to pay that 2-3% of the closing costs, and the buyer comes in with little to nothing. I mean, you say nothing is not far-fetched. We have done it very recently, where they actually came in with no money down, none. Okay. Now, let's say you look at a property, and again, illustration purposes, you would have to base this on your pre-approval and your reality of your loan, right? If you're talking about a loan of a different loan amount, it's going to be a different payment. different circumstances, right? But let's just say for illustration's sake that you are pre-approved for 600,000 and you find a house for 585 and you don't have money, you don't have down payment, you got to get down payment assistance, and you don't have closing costs. So now you're saying, okay, what am I going to do? Well, maybe when you partner with a good negotiator, that's why working with a professional is essential, right? Especially if you need them to negotiate on your behalf because the money is limited, right? You have your real estate professional negotiate with the seller so that they can pay your closing costs. Maybe we offer $10,000 more and ask them for 2 to 3% back. So each situation you strategize differently, but what we get the seller to pay, or we attempt to get the seller to pay for all, if not a great portion of that amount of money. So what does that mean? So let's say the seller agrees to pay for 2% and you have 1%. Well, now you have a $36,000 closing cost and you're bringing in $6,000. Okay, and you get to own your own home. And how beautiful that is. Let's say you would get the seller to pay 100% of your closing costs. Then you're coming in with little to nothing down. Now, keep in mind there are programs that offer you grants that you don't have to pay back. There are programs that are based on your credit, and there's programs that are that particular program is also banded on your credit. There's programs that are based on your income. So, broadly speaking, you want to research with your loan officer, your mortgage professional, which program is going to be better suited for you, your family, and your income. Okay. I wanted to just kind of give a visual overview or a rather verbal overview of what it looks like for someone to walk into a property with little to no money down at a real price point here in the Bay Area. Okay, now to address some of the things that you should be thinking about naturally is $4,400 is a lot of money, right? $4,400 is a lot of money. Well, you would not be wrong to say that it's not a lot of money, but here's the reality. The reality of it is, it's reality. Okay. We live in the state of California. We live in a very high cost, prosperous market. And if you're going to stay here and it's your desire to live here, then you need to figure out how you're going to do it, not why you can't do it. Okay. Now, that payment needs to represent no more than about 40, at the max 50% of your gross income. If the better credit you have, the more of your income it can represent. But for this video, I would like to say 40 to 45%, heavy on the 40% of your gross income. So you need to be making, upwards of $12,000 a month with no debt, right? And so what happens is there's three barriers to acquiring real estate, and it's credit, income, and it's money, right? Some people lack the credit capacity, which there's so many resources, and credit is not lender requirements have really gotten more. What's the word that I want to use? For lack of a better word, easy, but it's a lot less stringent as big banks. Sometimes when you go in big banks and you're always declined, you think that the whole world is like that. But they're actually lenders that I'm closing a deal, close a deal, 500 credit score. So credit doesn't have to be your issue. It becomes more of an issue when you have charge-offs and when you have defaulted federal debt and bankruptcies that are recently discharged. Those are more of an immediate issue, right? That's why it's always good to plan with a mortgage consultant as you're planning on acquiring real estate or doing anything in real estate, so that you can say, listen, these are my plans. Where do you think, where am I at? Write the roadmap out or print it out, draw it out for me, so that way I know if I'm on the right trajectory or not. A lot of clients that I talk to, that I think to myself, man, if I would have talked to these people, 5 months ago, I could have told them this, and then they could have came to me now, and they would have been ready, right? So talk to a mortgage professional. Credit, income, and money. So the second part is income, because as you can tell, if you're a solo individual purchasing a home, that money, that you need to make all that yourself. And sometimes we're falling short of that. Then, of course, money, which is the ability to put money down. So, I want to dispel some barriers that your credit doesn't need to be as good as you probably think. As far as the income, you do need to make the income though, right? And so, I have separate resources to talk about how to level up, how to get a side hustle, how to add entrepreneurship. That's not what this video is about. Um, but income, like you living in California, you gotta get to the money. You gotta get to the money. I mean, unfortunately, the state is requires that you earn if you want to have a standard a certain standard of life that you have to earn money and then be responsible over it. And so when you find yourself short of what you need, just go get it. And it's there for you. You have the ability to do it. You do. Okay. And then money, of course, we're dispelling this myth that you don't need as much money as you think, right? So um I hope that you're encouraged, and I hope that you don't tell yourself, oh, I want to wait, until the interest rates get better or the market gets better. Well, listen, if you don't want to buy a home, you have your right now. But if you do want to buy a home, don't play yourself and tell yourself you're going to wait until the interest rates get better. Because when you're waiting till the interest rates get better, so are multi-millions of other people, millions of other people, and they're all going to enter the market at the same time. And what happens when 10 people want to buy the same thing? The price goes up, right? If 0 to 1 person wanted to buy it and all of a sudden everybody wants to buy it, now I want more for it. And so you could be paying the same and or more if you wait. The issue is your capacity. Do you have the income to sustain a mortgage payment? If you don't have the income, then you have to wait. If you have the capacity and if it's your desire, then you should always try to acquire some real estate because you got to live and pay rent somewhere. In 5 years in a down economy, the home that I purchased alone, and I'm following all of the steps that I touched on briefly today about sacrifice and earning double and getting your income up and all that, and bought my first home. Even in a down economy right now, I'm going to get nearly I'm going to get back multiple six figures for that property, even in a down economy. Okay. Of course, I took care of the property and it's turnkey, and you have to take care of what you have. You guys, you got to take care of it. So what I'm saying all that to say is that if you haven't been able to save $250,000 in the last 5 years paying rent, chances are you're not going to save it in the next 5 years because you're living, right? And so real estate is the best way for you to take that savings of that rent and throw it into real estate, and in 5 years have something that you can do something else with, keep or flip or reinvest or buy another one, right? So we want to get you started somewhere, okay? My name is Carla Burris. Again, I hope you enjoyed this. I hope this kind of gave you a little bit of an overview of how we put people in properties with no money or little to no money down. I didn't cover everything because it's impossible to cover everything in 20 minutes, but I hope that I gave you a kind of like a gist, right, of what it looks like to buy a home in the Bay Area and how we do strategize on getting people in homes with little to no money down. All right. So I'm going to drop my contact information in the description and in the comments. And my advice to you would be to run and pursue what it is that you desire to pursue and come up with a strategy and a plan that works for you. Thanks for tuning in. Subscribe and follow me on my socials. I do provide information on financing and real estate and resources to help people start a new life. All right. I hope this message finds you blessed and encouraged, and we will see you next time.